Welcome back. You're watching HFO-TV. HFO-TV is co-sponsored by the construction, repair, and restoration firm J.R. Johnson, the real estate law firm Baljanik LLP, the tax deferral accommodator Butler Exchange Group, the mortgage banking firm Gantry Incorporated, and forensic building consultants providing building structural science services.
Welcome back to HFO TV. I'm Aaron Kirk Douglas, Marketing Director. With me today is partner Greg Frick. And Greg and I are going to talk a little bit today about the multifamily market in the Portland metro area.
Well, Aaron, thanks for doing this. It's kind of nice to be,
on the other side
on the other
table.
side of this. Yes, exactly.
So let's talk about some trends that you're seeing, that you're talking about with investors every day. Permits.
Well, as we've known, permits in the Portland metro area and the statewide have gone down from where we were coming out of 16, 17, and 18. So the number is down, which is something we predicted anyway. With inclusionary zoning, which went into effect effective 17, there was a mad rush of getting projects in. So we had I don't want to say an artificial bubble, but kind of a political creation of actually additional units that were put into the pipeline in 17. And as those are getting completed and absorbed, the backfill is not as great as we've seen in the past, which is, again, some of that has to do with, again, the amount that was done pre-inclusionary, and then as some of the economics have changed from some softness a little bit as you're absorbing those units, and construction costs, which we've talked about before on this show. Those have gone up. So there's been a little bit of an imbalance, and we're seeing new construction slow down. Mm-hmm. And now, again, what long-term effect will come back? I believe so. But I think, as I said, we had kind of this glut of units and really concentrated in the core. And that's where we saw the softness. And as those get absorbed, I think we'll see some backfill. But in the pipeline right now, it is, significantly under. And again, even when we had all these units in place, we were still not building enough units to offset the in-migration coming into the market.
Right.
Yeah.
So with in-migration and the slowing of construction now, do you have a sort of idea of what the time frame might be for when that starts picking up again?
Well, there's a couple factors in the side of new construction. One is, the cost. And those, we thought we would see maybe not a coming down of cost, but we've seen, from materials, ramped up. We've had inflation in those. So that's affecting the ability to make things pencil. And then it's also, there's a little bit of a political environment in terms of, the time to get permits. Is it a building-friendly environment? If not, that adds cost to it. So as you're trying to bring units online, your material costs have gone up, labor costs, which we've talked about, even pre-COVID, it's always been tough in this market to get, subs and trades. That's adding in. So we need to probably see some rent growth, continued rent growth, to offset some of that added cost. And hopefully politically, the municipalities from the state and the city and the county recognize that some of the things they put in place have made it more expensive. And when you have that, capital can look at other markets to build. So I do think we'll see a kick up. But again, is it going to keep pace with immigration? I don't know about. I don't think so. And then there's the question of land use. And we've talked about that. The urban growth boundary in our area, everybody wants to talk about building up. Well, when you build up, that's more expensive. You need to get higher income for that. So there needs to be kind of a balance there.
The vacancy rates, so construction is kind of lagging, and then the vacancy rates that multifamily Northwest put out in the spring had gone up a little bit over the fall. And then I looked recently at the U.S. Census Bureau, which seems to lag even the metro multifamily reports, and they had it up above 5%. So I'm wondering if you right now are seeing it go back down. You think it's actually, in reality, it's below 5% now, or do you see that maybe as people are dealing with this whole moratorium thing and maybe they're doubling up, or kind of what's happening with vacancy?
Well, I think one thing on vacancy rates to understand is, you're going to have different sources will have different vacancy rates. So I don't necessarily take one as the gospel of that's where we are as a market. You're kind of looking at all you've got from, utility companies doing that, metro multifamily, you've got the Census Bureau. So it's tough sometimes to get a handle unless you're really on the street and making those calls. What we've seen is, especially downtown core, there were a lot of concessions and higher vacancies. Absorption was slow. That's picked up from sure in terms of occupancy. So we're seeing those vacancy rates go down. Concessions are burning off, and you're seeing so activity has picked up. I do also think you've had, as we've kind of opened up, we're talking here middle of August, there was a been up during COVID. I think there was less movement, and people were staying in place. So we had maybe an increase in turnover this summer where, if things were okay, hey, maybe I was planning on moving last year. I didn't, now making that move. But there seems to be, so we say, enough pressure coming in the front door to address if you're not, retention on the back door. So, you're going to see vacancies go down, and you'll see concessions continue to burn off, especially in a market like here where you're not having that supply be, replenished. The interesting thing we are seeing, too, is in tertiary markets, a lot of demand, a lot of continued demand. And so we've seen really, low vacancy rates and rent increases in those tertiary markets as well.
Mm-hmm. Now, in the spring, multifamily Northwest reported rent growth at a little over 0.5%, whereas more recently, Yardi Matrix in Portland is reporting year over year for June at almost 8%. And I'm wondering if, when you're looking out in the market, that seems realistic. Or if they're maybe looking at high, like 50
Yeah,
and over
Yardi's
units,
going to be
or
bigger units, probably more geared towards newer product, just because those typically are bigger. Metro multifamily is going to probably have a larger cross-section. I think when you're looking at rent growth, it's going to be sub-market specific. But overall, we are definitely seeing rent growth. And I've seen some reports that, we're in line for the next 3 to 5 years, 20 to 25% rent growth. And so, again, that's based on the continuing immigration, the lack of supply. So, we're getting in a point where, again, there's going to be a shortage. We think there'll be continued rent growth, and that's why we're seeing continued capital, coming in this market, even with, some of the things from political to issues that we've kind of know here on the California, Oregon, and Washington. You still see capital because of, the feeling we're not going to be able to build enough, and we're still desirable enough. There's still job growth. So, I think we are going to have rent growth. Is it going to be 2? Is it going to be 5? Is it going to be 7 or 8% year over year? I think some of that will depend on the submarket, and some of it also depend on how soft it got, during COVID. We had some unit types that maybe had a little bit more where they didn't raise rents for a couple of years. Is there a rubber band effect, or is it slowly go back?
Now, we all know that housing prices in the Portland metro area have been going through the roof. So are you seeing, just anecdotally, are you hearing stories about people giving up their single-family home rentals and selling them off now, and so that's putting additional pressure on apartments?
Well, we've seen, again, we don't do single-family, but just hearing through stories and talking to some management companies that do, locally you've seen, because of pricing and the political and I would say from a management side, just it's getting harder to manage with COVID and even before that, some of the things that Portland had put in place. So I think you've got owners saying, hey, if I can get this number, maybe I'm going to walk away and get out. The part about that is, and what I've been asking, realtors and people, is that buyer that's buying that rental single-family home that used to be a rental, is the new buyer renting it? Is it an investor or is it a user? Predominantly, it's a user. It's going to use it and occupy it. So then you've put more pressure on, because that's now a rental unit, typically larger, 2, 3, 4-bedroom unit, that's not in the market anymore. Right. And so is that putting pressure, I think, on larger units? Yes, definitely. I think you are going to see small, and we're seeing that even in multifamily, some of the smaller operators just saying, I've had enough, if I can get this kind of pricing, I'm getting out. And what's that? Does that even affect the equilibrium in terms of less units, again, because we're not building enough, and then you've got some being taken out. So, which again will drive up rents. So
now can you explain to me what's happening with cap rates? That I've been noticing they're going down. So, right. Can you explain what that means?
So if we had this conversation 18 months ago, a year ago, we would, I would have thought with everything that's going on from, COVID in place, we may see some, delinquent rents. The political atmosphere here, would we see an adjustment in cap rates or an adjustment in pricing? If anything, it's been the other way. We've seen downward pressure in cap rates, so pricing going up. A lot of that has to do with just the amount of capital looking for investment. Mm-hmm. We are, we've been on the map in terms of an option for investment. I also feel that commercial real estate is not considered, quote, an alternative investment as it was when I got in the business back in the early 90s. It was something, a segment of the population did, but not everybody. Now, you hear advertisements on the radio about you can, take $20,000 and invest in a group crowd. And so I think you're looking at all this capital that's looking for investments. With what's happened, retail and office have really gotten the brunt of, COVID, and, is office going to go back the way it was? And retail, we already kind of saw, disruptions from Amazon and all. So some of that capital that maybe was going to be diverse in those arenas are looking at multifamily, which again adds to, similar to, the rental prices. If you've got more capital looking for product that's not available, it's going to drive up pricing and drive cap rates down.
So we've always seen a lot of capital coming in from California.
Yeah.
Do you think there's more of that now, or not?
On the private client side, it's been more. And I think we've always been fueled by what's going on in San Francisco, San Diego, and LA as capital is coming up looking for yield. And that's increased. I mean, I think you're seeing a lot of capital looking to get out of California. And I'm hearing the same stories when I'm talking to people in Arizona and other places around the West. There just seems to be a lot of capital looking to get out of California. And so, again, that's driving pricing up and cap rates down in this market.
And conversely, when people are leaving Portland with their money, where are they going?
We've had some that are just getting out. I've had more that are just saying I'm taking my chips off, and based on the uncertainty of what's going to happen on a tax plan, maybe they're going to pay the capital gains because they think it's going to go up. We've had some look at other markets, but Boise's had a massive run up in pricing and a massive amount of capital looking for limited opportunities. We've had some get into, quote, TICs or DSTs where they're looking for something more hands off. Back in the day, we had a lot of clients that more in the family offices that would maybe trade into, I'm going to trade into retail, a triple net deal, and let my kids deal with that. It's a lot easier. There's not management. That's maybe not quite the option because the gleam is kind of off of that. So they're looking for, is there something I can keep in there but not maybe as hands-on? So are they going into a partnership or a minor interest? So some of that's going on.
All right. What are some of the most common questions you're hearing right now from owners?
Well, one of the biggest is what's going on with the rental relief. And they all want to know,
am I ever going to get my money?
Am I going to get paid? Has it been? What are you hearing from other owners? And so that's a big one. And what we think, there's another one of what's going to change from a tax plan, from estate planning, capital gains, 1031s in 2022 versus 2021. And even talking to CPAs, they're having a hard time. Nobody really knows. So how do you make a plan for that? And then just it's the feeling of it's tough to manage. It is very tough to manage now. And are there options? And what are other owners doing? What are you doing with, how do we deal with what we call the elective non-payer of a tenant that just, doesn't want to pay, is not communicating? How do you deal with that? So there's a lot of conversations in that. And then just options, where do we think it's going to go? Are there other places to invest? And I think COVID has brought, I tell this to a lot of people, discussions that families or groups were going to have over a 5 or 10 year period. I think COVID is maybe shortened that, compressed that, and people are, do I want to live here? Maybe it's made family, or I've got flexibility. I don't have to live. And so when they start having those discussions, and then it starts coming, well, if I'm not in the area, do I have investments here? So that's been interesting. We've had a lot more kind of a consultation, estate planning than we've had ever before. Yeah.
Okay. Well, thank you so much, Greg, for spending a few minutes talking today.
It's always nice to be on the other side of the chair sometimes.
All
Again,
right.
This is conversations we have all the time, and this is what we do every day in terms of advising and consulting. So
this was very easy.
Yes.
We'll see you next time on HFO-TV.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.